Well, thanks, Scott. I really appreciate it. And we kind of hinted on it last week when we talked about it's very difficult. We think of things like an analyst and like a portfolio manager. One of my pet peeves doing this now for my 33rd year is when an analyst downgrades the stock and then maintains the buy recommendation and changes the target price at the lows. We wanted to make sure that we felt really good about the low that we think is in place, actually, for this correction. It is a correction. It's not a technical bear market in the S&P. And we wanted to kind of bring things back to reality. And the reality is, Scott, quite frankly, that to attain a 34% move in markets from that 4,000 or so level was not going to happen in our view. And again, we want to play a little bit prudent person rule here, but we feel very comfortable with our revised target of 4,800 at year end, which is still a new price high, which gets us 20%. But I think the other part of what we did, I think is very tactical in terms of kind of tilting even more toward value and out of cyclicals and maintaining a market weight in tech, because we do believe that the majority of the tech sector's weakness is already done, and we really want you to continue to focus on those most very stable and secular growth aims within tech.
I almost feel like this comes with a little bit of kicking and screaming, if you will. I get the fact that you dropped your price target to 4,800. However, and the reason I say what I did the way I said it is that you maintain your earnings target. And I'm wondering how you think that stocks are going to re-rate the way they have, and you think they now will, by keeping your earnings target the same.
It's a great question. It's something that you and I bantered about when I was on the show live last week at the New York Stock Exchange. And as I said last week, we feel very comfortable with our earnings target. And when you take a look at the path of where bottoms-up earnings are, we're almost there, number one. Number two, from an operating performance standpoint and cash flow, the other parts of the income statements of the 500 companies at the S&P, we think we're going to get there based on how strong fundamentals are. Number three, in terms of the re-rating, over the last 20 years, the average PE is 20 on the S&P. We're obviously dealing with lingering inflation. And again, we called it wrong. We thought the inflation would go away a lot faster than it did. And so guess what? The upside could be that inflation does indeed fall apart. And I'd rather be in a position to once again go back to 5,300 and really continue to sustain those very strong earnings, which we think still people are understating.
I mean, it still seems as though you're holding on to this notion that this is not a bear market. No, it doesn't seem that way. I mean, you said it yourself. Whether we were down, Brian, 19 or 19.5% rather than 20 from the high on the S&P, we're quibbling over that. I mean, by all intents and purposes, by looking at almost every single thing internally in this market, it's been a bear market. I mean, if it walks like a duck and talks like a duck, it's a bear in this case.
Yeah, it's a bear. And as I said in the report, the market is acting like a bear market. And it's already kind of discounted what I think is coming, which I do believe that the economy is going to continue to stay strong. And I'm a believer that Powell is going to orchestrate a soft landing. I firmly believe that. The other thing that's kind of lost in the report is we upgraded communication services. And communication services, we think on the growth side is massively oversold, Netflix and Google. But more importantly, on the value side, AT&T and Verizon, we think are very attractive yield components, especially considering how expensive consumer staples and utilities, even though we brought those up to more neutral, they're expensive sectors. And yeah, I think you have to be careful kind of chasing the traditional defensive sectors here. And I think the communication services area is a great contrarian buy right here.